Not since the lows of 2022 have we seen the Nasdaq do this, but what was it and why does it matter for us as traders and investors? In today's video, we're going to take a look at the gap fill that just was achieved by the SP 500, the strong pickup in stocks around the world, and the massive dark pool transactions that went through leveraged funds, specifically in Nasdaq stocks. With NVDA breaking through the call wall for the first time now over the last couple of days, and US oil poised to be a very volatile trade, we need to talk about markets around the world. So guys, let's get into it together right now. Stocks, commodities, and cryptos coming up in today's show. Well, welcome back everybody to the Daily Show. We have some amazing stats to share with you today. If it's your first time here, remember to subscribe and smash that like button. But let's get into it straight away because, of course, dark pool transactions proved correct today when semiconductors went from being down through the session to absolutely skyrocketing. NVIDIA breaking through the call wall and entering positive gamma for the very first time in a while, and more coming up in today's show. Also, Google managed to get back a little bit. But really, I want to start off with sentiment because as we know, if we're climbing a market up, we need to be doing so with a wall of worry. In a recent report we shared the previous video, check that one out. We'll talk about it briefly today from UBS. They claimed the Russell 2000 may fall as much as 10% over the next 1 to 3 months. People, of course, believe now that we're in a recession and that the Federal Reserve may have to aggressively cut based on that CPI report to as much as 50 basis points. So what is the market actually telling us? We'll take a look at this latest survey report and more importantly, the difference between the bulls and the bears, that is the spread. We're now at 20.9 and you may be aware that when we get down to these types of levels, they can indicate big turning points in markets towards the upside. We've got more survey reports coming in the next couple of videos, so make sure to subscribe as we go through all of them and bring them together to see whether that wall of worry really is in place. Now, what about the stats? Well, I'm going to read you out something that we posted over on X, follow in the links in the description down below, and that is a flashback back to the last time this happened. It was in 2022 and the Nasdaq was down 1% intraday, but rallied to close up over 1%. The date, 13th of October 2022, right after pretty much the bear market ended. And you'll notice here that these can be incredibly important data reads. Sometimes they're at the bottom of markets. Sometimes they can indicate we're in an incredible bear market turn. And you'll notice that often they actually do come with a little bit of a rally before they even drop. And of course, with the price action looking like it did, which we'll look at in a moment, this is a huge deal because these types of wicks, these types of rejections do matter. But that's 2 data points. You need to keep them in mind. Yes, that overall chart looks like, yes, we could be in the beginning of some kind of massive recessionary sell-off, or you could take it as a huge thrust, especially when we're already in a pullback. So something to be watching and, of course, looking at. Now we go over to inflation. Now, according to Jeremy Schwartz over on X, he believes that it's time for potentially the Fed to consider 50 basis point cuts. Now, we've discussed the idea that a 50 basis point cut may be aggressive and could signal the market actually being in a free fall, effectively that the Federal Reserve is panicking. Now, of course, we've shared the stats on this before, and we'll talk about it again today, but effectively, whenever we've seen 50 basis points, at least the last 2 times when they've started cutting, it's led on to a recessionary path. Now, wasn't the inflation report bad? Well, core CPI was 0.3%, it was expected to be 0.2%, and I probably think that one of the biggest things was shelter. But some people are believing, based on real market evidence right now, that shelter is actually dropping over the last couple of weeks. And that could be a sign that, yes, the economy is actually weakening and may need federal stimulus quicker than it might be expected. And that's, of course, where the 50 basis points is coming from. Let's also talk about volume and volatility. So it was a big day of big trades, but also the VIX is continuing to be quite elevated. Now, we expect this to continue. This is actually sourced from Tom Lee Fundstrat, and basically it talks about the idea that we are most likely usually going to see VIX peaks in October, not actually September, as many people believe, and that we're generally going to see market lows appear in August. Now, this is important because we did see a market low in August. At the beginning of August, we saw a market low, and now we're in, of course, September. But could we see a VIX peak in October? I don't believe so because, of course, the VIX went to over 65, which is incredibly rare. But what usually is happening here is it's saying that we're in potentially a kangaroo style market, a coiling market, which will go up, down, and all around into this year's US election, which is, of course, tightly contested. Now, this rings true when you start to think about the data stats that we've also got moving forward, the interest rate cut that's impending, how that usually reacts, and of course, the uninversion of the yield curve, something else we've got some data stats on today, and we have discussed in our previous videos. Now, what about the percentage of S&P 500 stocks above both their 200-day, their 50-day? Are they still healthy? Is this market still intact? Well, 53% of S&P 500 stocks, according to Grant Hawkridge over on X, are still above their 200-day and 50-day moving average. That's not exactly weakness just yet. And I know that, of course, UBS and others have talked about how this market is incredibly weak and starting to show some type of decline in it, specifically financials and high-yield junk bonds. But we do need to put it back into the perspective of an overall bull market run. Now, we know that bull markets are cyclical kind of events, and they tend to last a certain period of time. The median usually is around 38 months long, and of course, the average is 52. Now, you can see by this chart and many others that we've shared on the channel over the year, we're not quite there yet. In fact, if we were to take kind of the median, we would hit it around, I believe, May of 2025. Now, will we follow in a recession? It is our belief here on the channel that we will, and that we are heading into a late cycle that will be headed up by a recession. But you must remember that we need the signs. And some of those signs, such as this one here from Todd Sohn, are not really coming through. We're not seeing long duration index relative to the S&P hitting the top deciles that really matter when it comes to actually seeing a recession. And this is something that will be probably already showing in the price action when it does trigger, but something that you should consider. And of course, we will be tracking over the next year. It's one of those good indicators that's usually a little bit late, but of course, we do have on this channel some early indications as well. And most of those are not triggering just yet. We will be continuing to follow this story. As we spoke about, UBS believe that Russell 2000, financials, and high yield junk are the most volatile over the next 2 months. They're certainly going to be, I think, at the biggest risk of this election. Of course, who wins may have big impacts on particularly some of these pairs. And we do also know that when it comes to the wall of worry, this is kind of the thing you want to see, people having a difference of opinion. Some people saying the markets need to crash, everything's going to hell, and we're all going to go down with it. And then, of course, the price action to be going against that trend. Now, you might think that's crazy, but we do need to understand that Federal Reserve, central bankers, and of course, governments around the world will try to stimulate a sick and slow lagging economy. And that's kind of where we're at now. Late cycle is that type of period. So with forward returns from the Fed first rate cut also expected to be volatile, take a look at this. The last 4 times we've seen the first 5 days actually be negative. We've then seen, of course, volatility continue through. It's pretty clear that the chance of a kangaroo style market does become evident, especially into October. Remember, the speed of the Fed cut could be important in terms of fast and slow cycles, and these are the overlays. We've talked about these several times before, so check out our previous video for in-depth detail. Also, when it comes to the S&P 500 performance 10-year versus 2-year curves, we know that uninversion is important. The structure of the market moving forward as we're going through this kangaroo style period will basically make or break whether we're going into potentially a recession or not. If the market starts to climb the wall of worry, then that is going to be a positive sign that we're probably going to continue for the next 9 months after that. But if the market starts to go really negative and it starts to go break structure and key sectors break down, well, of course, that's telling us we really do need to worry because late cycle could mean impending recession at any point. And some of the charts are starting to point towards issues. First up, let's overlay the 1970s versus the 2020s. We all know that the 1970s are well known to be some of the worst inflationary periods ever for the world, in particular the US. And we also know that we're following almost the identical path. Now, with another read, we're kind of looking like this on inflation. And we expect somewhere around here for inflation to potentially bottom off. And then as the Federal Reserve begins its cutting cycle, for it to re-spike. Now, it's this re-spike that we are looking for. Do remember this. Keep a copy of this chart. We've got it over on our X, so follow us there in the links in the description and pinned comment, because does matter for our investment and trading into 2025. Let's talk now about dark pool transactions. And I've got to say congratulations for people that were buying and hodling that NVDA over the last couple of days. If you did, let us know in the comments down below, because it's always great to see people that are making their own decisions, of course, with some of the informed data that we have here. And one of those big things was NVIDIA. And we saw dark pool transactions come through. I posted this on September the 7th, and I said, wow, take a look at this. Huge dark pool transactions coming through on arguably one of the best stocks in the world. And we were looking for a 110 breakout. Well, we certainly got that and more over the last 24 hours with semiconductors being bought up. But it doesn't just stop there. Just before the close of the previous session, we actually saw a monstrous trade in semiconductors. Now, this was, of course, pre-CPI. So a monster trade came in just before CPI. We see this huge transaction in semis. The market went negative, of course, first, and then absolutely ripped up. And this just shows you these big players, they know what they're doing. And they seem to be doing even more transactions. It looks like here we've got the Ultra Shares Triple Q getting a massive transaction on the close as we broke to a new high. Is that an additional add? Is it a sell? Of course, this could be still a sell, but it's the number one largest trade that we've seen in quite a long time. That's huge. Plus NVIDIA, massive trades down the bottom, the non-dark pool ones, another massive one into the close. So semis were getting heavily traded here, and you can see again some big trades coming through. So dark pools are certainly active. There were a lot of people buying into the close, or at least making transactions in the close. Now we need to see whether the price action makes sense. Let's talk about rotation first. It was probably a post-debate transaction for the day. In particular, solar went ripping up 6.27. As you know, of course, there's differing opinions, but in general, the market saw it as maybe the Democrats got a little bit more in front. Solar up on their policies. And I still suggest, and I think one of the things you don't really want to be doing is betting on this election. You know, one of the things is a lot of people are building Trump portfolios or Democratic portfolios and they're going in on it. Sure, if you like to go in on a coin flip, then you can do that. But remember, you want to get edge in markets. One of the things we talk about here on the channel is gaining edge through statistical data, through macro, through all of these different tools and methods. And then, of course, we bring it in with the TA, with the momentum, with the flows, the options flows as well. Regional banks were down. That's something to continue to watch because, of course, that is a concern. And you'll see the 5-day rotation now has had banks and regional banks at some of the worst returns. Now, this will be a story we need to watch. If regional banks start to suffer a lot and banks start to suffer a lot, remember JP Morgan came out with a bit of a warning there. The COO came out and said, oh, I don't know what's going on here. Maybe we've got our forward projections a little bit, they're a little bit weaker than maybe we expect. Well, that will be certainly an underlying concern in the markets, but it's not there just yet. So let's take a look at the S&P 500 and let's just dissect what happened here. It came in, it sold off where the bears kind of were sitting, which is right around here we talked about in the last video. It moved down to the gap fill at 540 and then it just ripped. And I want to go smaller time frame here because firstly, we're at 55.54. That's actually a breakout past that important 55.50 zone. But have a look here at how this traded in. And I'm just going to show a 15-minute chart. It goes up, takes a new high, gets absolutely demolished down to this level, and then rips for the rest of the session with massive transactions coming in near the close. You can see here, not as big as this low one was. That was absolutely huge, but still some big ones here, even by the standards of the last couple of weeks. If we have a look at the futures market, we've updated the high lows for the next day, and it does look pretty strong. What this is showing us is that someone got really excited down here. They went, oh, I like that price. And they said, I'm going to buy for now. Otherwise, we wouldn't have ripped up the way we did. Now, because we've ripped up the way we did, because we put in the candle the way we did, you've got to think it's generally bullish. Now, of course, there is a chance that a bear could get hold of this and absolutely smash it back underneath. And bulls will be caught offside if that does happen. So, of course, that could be a trade in itself if it does occur. But with the evidence in hand right now, with the kangaroo-style market that we expect, and of course people being fearful coming into the rate cut and now expecting 50 basis points, maybe the market's trying to climb the wall of worry into that event. And it kind of seems probable that what we've been talking about recently may be what happens. Maybe we do this moving forward through September into October. And in particular, it looks like this market is going to see pullbacks being met by bull demand. So effectively, the market is quite bullish, And of course, it's worthwhile paying attention to the options flow. So let's take a look at that right now. 55.20 over the next 24 hours. You'll notice we're in full positive gamma event. Again, we went from being negative gamma in the previous session, full positive gamma on board, and basically 55.20 being the important strike of the next 24 hours. If we remain like we are right now above that, we could push, guess what, 5,600. Do you think we're getting through 5,600? I think it's unlikely. I think it's probably a no, but 5,600 will be what scalpers and day traders are looking for if they're going to push the positive gamma side. When we take a look then at the 13th, things get wild with the amount of options that are through. Look at all of these options. They're everywhere over here. And of course, we have a lot of puts, so maybe a put wall sitting around 54 kind of 80. So 54.80 seems like kind of the bottoming point here potentially for the market over the next 2 days. And the positive gamma is, of course, quite fierce across the board with tons of calls coming in. If these start to feed upon themselves, well, we all know how that kind of works based on 2024 so far. Tesla, let's have a look at Tesla. We know that that's been in positive gamma, making it back to 228 after selling pretty low during the session. Again, 230 remains the key breakout, and we'll look at this on the charts very soon. And then we move over to NVDA because this thing ripped. And it ripped through to 110, which we knew was a key level, and it is firmly, again, in positive gamma. Now, we're seeing a lot of 2021 stocks as well that are starting to rip up based on the idea that rate cuts are coming. You actually see structure on many of these stocks, such as Square and others, although you might not actually believe they're good companies, possibly they're not at all, they are actually starting to see buyers come in. So things have really changed here over the last kind of 24 hours, and this is often what does happen when it comes to price action. Of course, things are looking like there's positive gamma across the board. Options markets, of course, are moving, and it looks like some people have been caught offside and potentially getting squeezed in. If we look at the CTAs for some of the major markets, the Nasdaq was coming in with a little bit of buys in the previous session, so that's probably going to accelerate, you would have to think, over the last 24 hours. We'll have that update on the weekend, I believe, because we're a bit delayed here with CTA data. That's how it always is. And SP 500 looked similar. So CTAs have been buying this dip so far. We knew that already because we saw dark pool transactions. We reported on the channel, but it does look like that's what's happening. And I thought I'd bring up Brent as well. Of course, we know that Brent, or in general, oil has been absolutely getting smashed. This idea of negative contango and also, or contango in general, is all going through the markets. And this is really oversold. So it's one of those markets that could be in for a catalyst. Let's now have a look at the charts, and we'll also take a look at oil and see whether CTAs might start to buy it up. Remember, if we see a building of structure and CTAs start to put in huge amounts of transactions, that's going to be a really good sign. It's about bringing data with the TA itself. That's what we're looking for. Yield and inversion basically continues over the last 24 hours, which we'd have to expect. We also saw that in general, this was a day of risk on because, of course, utilities and healthcare versus the SPY both dropped. So that basically is telling you that it was a little bit of risk on across the board. And we saw the US dollar putting significant pressure on the daily 20. Nothing from the US dollar, though. There was actually no trade and still remains no really easy trade. If you were doing anything, you'd go with the trend, which is obviously down now for the dollar. But we didn't really see a huge activation on the daily like we suspected we may have. Copper may be set to break out. We've been bullish on this basically the last 3 or 4 videos, and so far, so good. It's holding those lows. And this is a significant change in copper. It was been so negative for so long. All the metals have been, but it looks like some of them are coming to life. Copper's coming to life. Oil's hit its lows. And of course, iron ore is absolutely in the dirt, firmly in the dirt. So will that start actually improving? Maybe need to wait till October or even November. We'll find out. We will be watching the price action. Let's talk about oil. Huge trend line to break here for oil. Still early days. Obviously, it's come back to our watch reaction here level. We believe this is an extreme oversold zone. We're needing oil to break through at least $69.20 to even $70 a barrel to really start to regain structure. But the first thing is first, similar to Bitcoin, which we'll look at in a moment, let's break the downward trend because right now it's firmly entrenched. Best first sign, we've gone through the 2-hour 20 moving average. You can see here we're breaching through that and a new high here plus trend line. I think that's an initial person that's going to say, well, you know, it looks like the structure is improving. It looks like the market's actually starting to turn up. Let's move over to gold. Still coiling, still stuck in the range. A higher interest rate, let's say if the interest rates do go up, not really great for gold at the moment. But as you know, we are bullish gold and silver on this channel. We have continued to be bullish all year. And some of the best asset classes, in particular gold. Of course, gold's much stronger than silver. Silver's kind of like the pseudo commodity / currency. So speaking of silver, it's bouncing. It's not through, of course, $29 yet. If it does go through that point, that will be important. And of course, we'll focus on it when that does happen. Let's move over to Tesla. Positive gamma still in play here. It was a bit of a wild and woolly day for traders. It went down pretty hard and then came back up. If we get a breakthrough 230 plus, especially a weekly close, this could start to feed upon itself. And there is a real chance that Tesla could move towards 280. Head and shoulders, left shoulder, head, right shoulder could be in play. Not really a pattern I'm seeing a huge amount of people discuss. Let's move over to NVDA, big break. 110 plus broken through the session. Thing ripped for the rest of the session. Absolute monster day, 8.15%. And this comes off the back of the big dark pool transactions. But remember, it was really TA that got us here. And I do want to say congrats to people that actually were looking at that dip because, of course, we knew there was probably going to be weakness. We've seen a bit of a dip here. It does look pretty good for now. And, of course, it looks like whether there's even a sell-off over the next session that generally bulls are in control here of this big rip. And we'll see whether they can continue because, of course, semiconductors did the same thing, breaking through 228, 5.16 on the sector. Now, we may be a little bit concerned about how rippy this was. This was such a huge move that sometimes these can be part of bull traps. So basically the markets rip up so aggressively, they look like you've got a FOMO back in. Some key levels to be watching in the future, 242. And I think semiconductors should be watched here because we know this structure in here is most likely where the next bear level will be. So will there be any kind of, even a sell-off in here is likely to be met with bull demand, trying to push it back to that 242 level. What about Chinese markets and international before we go back to the US? Well, of course, HSI, an improvement. Not quite through that 17,300, but we saw a bit of a bounce in some commodities. That's not bad for China. It's looking a little bit better there than it was a few days ago. Australian market also holding its own. Again, we are bullish on this market. We kind of feel like it's going to break through the 8,200 plus highs and possibly move its way over the next 6 to 9 months to 8,800 plus. So we'll see whether that can continue to happen. It does kind of stack up with late cycle style investing, financials, commodities, utilities, defensive style old economy stuff. US 2K does its thing, creates a tweezer. Pretty bullish looking chart. Obviously want to see follow through. 2143 being the next zone of potential resistance. So I think that will line up pretty well with the semiconductor level as well. So there are quite a lot of signs saying that pullback should be met by bull demand and things are improving. Even though UBS obviously hates that market at the moment, the price action is the price action. Now, if we move over to the Nasdaq, you can see it got through that massive high zone. Again, key levels to watch in the future will be around 19,600. And if we go over to the Qs, because I know a lot of you guys like those levels, it will be something similar, about 476. Now you can see here as well, breaching this level here, this major bull area, this is a big deal. I mean, it came back down, it put pressure on the markets and it ripped. And that's the type of thing you want to see. So again, flow is in the bullish direction. Flow is also going for Bitcoin right now. It hasn't broken and closed above the daily 20 moving average, but it certainly is trying to. It did that break of the trend line just a few sessions ago, held 54K, which was ultra important for it. And it does look like the crypto universe might be getting a bit more of its mojo back. Don't fall into the narratives of, it's, falling because of a debate or something like that. Don't worry about that. It's so low anyway at the moment compared to where it was. It's really just about flows. It's not the narrative. It's the price action, the data, and the statistics that you really need to be looking at. Leave your opinion at the door. Most of the time, we're fed information that is incomplete. So it's very important that we always look at both things. Remember, we played that stat before of the Nasdaq going from down 1 to over 1, and how the last time, you could say, well, the last time we saw this was the bottom of the market and it ripped up. But when we look at all of the stats, we also saw it a lot of the time in markets that were actually beginning big bear sell-offs. So of course, it's not conclusive 100% how it looks. I would say it's more of a thrust indicator, but of course, it could be a short-lived thrust indicator in a kangaroo or even declining style market. Important facts to really be looking at when it comes to the charts. CPI enters into PPI. So PPI coming out 1 hour before on Thursday's open. This will move markets again, so expect some volatility there. And if you enjoyed today's video, then please remember to sign up and, of course, make sure to also follow us on some of the other socials. Now, quick announcement here. I will have an extra link here for all the Melbourne and Sydney people. If you're interested, we have some free events. Yes, I said free with a couple of drinks as well on us to have a great catch up with members of the community. And of course, trading, we're doing a seminar event and I'll be doing something very special for you guys in Melbourne and Sydney, which is going through our 12-month outlook on the markets, along with some trading secrets that I think you'll enjoy. If you do have time, it's going to be Melbourne, the 9th of October. So make sure to put in your diary. You've got to come. It's going to be worthwhile. Thanks so much for watching, guys. Subscribe, smash the like button, and we'll see you in the next one. Bye for now.